Hey, what's up guys, John here. More housing will be completed this year in 2024 than in any other year in American history.
New apartment construction is soaring across parts of the United States.
Real estate experts say it is now on track to beat, in fact, a 50-year high.
Apartment rents are tanking right now in most areas.
Rent prices are falling. Rental prices are coming down around the country.
Renters have so much authority inside of the rental space right now. 1/3 of landlords are now offering concessions such as first month rent free, first and last month rent free, free Wi-Fi, free parking. They're offering whatever they can offer to fill these units. I just got done driving across America because I wanted to see this myself, see how these markets are being impacted. I went to Vegas, I went to Austin, I went to Phoenix, I went to Denver. All these markets are flooded with inventory. The cranes are littering the skies from apartment developers. But when you start to see what is going to happen next, you'll see one thing very, very clearly. There's going to be a race to the bottom, and a lot of landlords are going to be in very big trouble. In this video, I'm going to break it down and show you just how much trouble they're in and exactly what's unfolding in America's housing market. Please hit the like button. Hit the like button. YouTube will share this content to educate the people about what's really going on in America. And if you'd like to fix your credit, we'd love to help you at my company, greatcreditfast.com. That's greatcreditfast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to greatcreditfast.com. Click the link in the description just below this video. Schedule a free call tomorrow and check out our reviews on Trustpilot. Take a look at this. So 2024 will have the most multifamily housing completions in history. Housing starts have collapsed in percentage terms, but this will still be a record year for multifamily completions. Now, this is happening. Philly, they're cashing in. Tenants are, look at this, tenants cash in on discounted rents. Concession surfers are looking for repeatedly cash in on incentives doled out by landlords, especially in hyper-competitive environments. You have, every outlet's talking about this. U.S. construction boom is sending rents lower and creating perks for renters. Just came out 20 hours ago. You have CNBC covering the same exact story. A U.S. construction boom is sending rents lower and creating perks for renters. Now, when you look at this, more than 1/3 of landlords offering at least one rent concession in July, you think about what this means. This, a year ago, 2 years ago, someone would say this is going to happen. Everyone would call that person crazy. No way. Rents are going up 10, 15, 20%. No way landlords would be pushed into that corner. Now what you're starting to see, though, is the complete opposite. I predict we're going to see rents drop dramatically in a lot of cities. And it's not just going to be from these home builders. It's also going to be from, you look at the silver tsunami, tens of millions of retirees and people that are entering this next stage of their life. They're looking at their home saying, you know what, do I sell it for cash? What's that cash going to be worth in 5, 10 years? I want to hold on to the property. I want to rent it out. What about all those people that locked in 3% mortgage rates and now they're underwater in their properties? What are they going to do? They're going to rent their homes out. You're going to see more and more and more inventory hit, all competing with these new builders that are building up, most of these cities all throughout America. The median asking rent for apartments in 1 to 3 bedroom rents fell in July, the first that's occurred since 2020. Now, Austin, everyone knows what's going on in Austin. It's unreal. It's unreal how far and fast those rents are going. Even in San Antonio, landlords are offering concessions as housing markets, landlords sweetening the deals for renters all the last 24 hours. Now, when you look at what this really means, let's break down the numbers. Let's say, for example, you are an investor and you want to buy a $5 million property and you close on this deal. And let's say that this property, the gross rents, I'm going to simplify this, the gross rents across all the apartments are pulling in $400,000 a year. $400,000 a year. You still have expenses. You have your mortgage, your insurance, taxes, upkeep, repairs, things like that. Let's just say your operating expenses are 30%, right? This does not take into consideration a mortgage. So whenever you look at a cap rate, it's always as if you bought the property in cash. So you say you have 30% going directly towards expenses. So your operating expenses are 120 grand a year, $10,000 a month. Vacancy rate, 10%, right? Your net income will be $252,000, which you would use to pay yourself and pay your mortgage, and you'd be left with $252,000. Now let's say, for example, you now have a lot of apartments that are available for rent inside of your market, and you have to offer concessions. You have to drop rent, maybe $50. You have to drop rent $100 a door to fill these units. Well, let's say that your rent, your annual gross income goes from $400,000 to $350,000. And let's say your operating expenses go from 30% because insurance is going up. It's gone up dramatically in most areas. Taxes going up. The cost to maintain and operate these properties going up. Everything's getting more expensive. It goes from 30% to 35%. That 5 cap now went to a 4 cap, meaning if you paid all cash for that deal, you would have gotten a 5% return. Now you're getting a 4% return. You make more in T-bills, right? So what does this really mean? It means that 20% of the value of this $5 million deal just got erased because of this. $1 million. Think about that, $1 million. Now the landlord that would buy that $5 million deal generally put 30% down. So they might go put, call it, $1 million, $1.5 million down, right? Well, if the property is now worth $4 million and they have to go back to the lender to get a new loan because these commercial loans, they have to refinance them every 3, 5, or 7 years, that lender is going to say, look, the building's worth $4 million bucks. You owe $3.5 million on it. We're not going to give you 100% loan to value on this. We'll give you 70% loan to value. So you need to bring to the table another $1 million to keep this property, or we're going to foreclose, right? This is what's unfolding right now inside of multifamily real estate. These landlords are in very, very big trouble. I think it's going to be one of the biggest opportunities to scoop up distress. Problem loans tracking the biggest multifamily delinquencies. I mean, there's one landlord in San Francisco. It's over $1 billion portfolio, losing it. Look at Tide's equity. They're getting funding from some of the biggest private equity firms on Wall Street. They already lost multiple properties. If you just look at some of these huge players, they're just getting completely wiped out. $929 billion is maturing this year. So in loans, $929 billion, nearly $1 trillion in loans in the next 4.5 months are going to have to go back to the bank and get refinanced. And then from now until 2027, that number goes from $929 billion to $2.2 trillion, right? So it's going to be an absolute bloodbath. And I believe what we're going to continue to see is we're going to see more of a conversation around we need to drop rents further. It's still not enough. We need more tenant protections. And you've heard about this with, rent controls and rent caps, talking about, how this is going to be coming. You start to think about this, it's going to just take away that appeal of being a landlord. You're going to see a lot of people wanting to exit the business. I believe it's going to be a really, really big opportunity. Look at this article, for example. NYC owner of a $1.1 million house torched by squatters says that they keep coming back and have more rights than landlords. Well, look at what's unfolding in Argentina. They ditched rent control, and now housing supply is skyrocketing, right? This is from Newsweek, right? So if we're moving in a direction where we're going to go rent control and 5% rent caps, like what they're talking about here, you just realize what this is going to mean. We're going to see so much change unfold throughout real estate and throughout America. As rental rates cool, 1/3 of property managers offering things like free weeks of rent or parking. Property managers are offering rent concessions as the rental market improves. Over half of rental listings offering concessions are in the cities of Raleigh, North Carolina, Charlotte, North Carolina, Atlanta, Salt Lake City, Utah, Nashville, Tennessee, Austin, Texas, right? Well, it's very fascinating because when you start to look at this, what you'll see is something shocking right here. So it says metro areas in Florida and Texas, 2 Sun Belt states that have introduced a high number of newly built apartments since the pandemic, are seeing significant rent price declines as more units become available. Now, I am going to release a video tomorrow about Miami. What's unfolding in Miami's real estate market is unreal. They have 40,000 apartments under construction right now. In 2007, right as the great financial crisis was brewing, set to explode, there was 20,000 inside of Miami. So you have twice the amount of inventory, and that's just the last 18 months. That doesn't take into consideration any of the new housing stock built in 2021, 2022, all those new apartments. Doesn't factor in that, you're seeing a decrease in population in Miami, right? You're seeing a lot of people, leaving Miami. You're seeing a lot of change inside of Florida, and you're seeing a lot of change inside of Texas. For example, the median asking rent in Austin fell to $14.58 in July, a 16.9% decline from a year prior. Think about that. If you drive through Austin right now, you will see everything under construction. Everything is under construction. And it's already declined 16.9%. Where's that number going? Is it going 25%? Right? Is it going to go 30%? Because if if they can go 16.9 and we have all this new inventory hitting the market, I think it could go 20, 25, 30%. And then if that's the case, what does that mean for all those builders that have debt that they have to roll over? It's going to mean it's a domino effect. But you start to ask yourself this big question, and the most important question is, who's going to buy these properties? Who's going to buy these properties? Going to be investors, private equity firms, pension funds, sovereign wealth funds, Wall Street firms. They're going to be scooping up these deals. And you think about this. If these deals have lost 50% in value or 40% in value, and they're able to go out there and scoop them up for a much lower cost basis, they can reduce the rents to attract those tenants. And the ones that have more debt are going to be forced to compete. And so you think about this. If you're a Wall Street firm, what are you going to do about it? You're going to try to reduce your rents in the short term to scoop up all those tenants, apply as much stress as possible on your competitors, push them out of business, then scoop up their properties and gather market share. That's what you would do, right? If you're a Wall Street firm. And that's what I think is going to happen across multifamily in a lot of big cities. And I think we're going to start to witness major change throughout real estate. And I think tremendous fortunes will be created over the next 36 months for he or she who's prepared, that has the knowledge, they have the cash, they have the credit, they have the plan. Those are going to be the people that are going to step in and dominate. What do you think about this entire situation? Let's have a conversation about this below. If you'd like to fix your credit to position yourself for funding, maybe you're thinking about buying a duplex, triplex, or fourplex, we'd love to help you if you have any credit issues, late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions. There's even new loan products out there right now offering 5% down payment on duplexes, triplexes, and fourplexes. So if you're renting right now and you're thinking, hey, you know what, I don't want to rent forever. Well, you could go buy a triplex or a fourplex, live in one of those units, collect rent on the adjacent 2 or 3 units, possibly live for free and stack money and buy more and more and more rentals and drive your housing cost to zero, because you think about how expensive everything is. It's a great defense play, and I think a lot of people will start looking into this. So if you're thinking about investing and you have any credit issues, we'd love to help you at greatcreditfast.com. You can click the link in the description just below this video, schedule a call for tomorrow. Check out our reviews on Trustpilot, and catch you next video.